Okay, guys, a lot going on in the markets lately, obviously. We had a huge dump in Chainlink, but of course, there was a huge dump across the entire crypto market, so it's not something fundamentally wrong with Chainlink. If Chainlink was the only one that did that, well, that would obviously be bad news for Chainlink, but how can you really fault Chainlink for falling along with the rest of the market? Now, obviously, some fell more than others, and some have been stronger than others. And in general, we've seen some weakness in Chainlink, but it might not be as bad as you think. Well, we had that. We were looking at that long-term channel for a while now. Let me put the bottom of that channel back on here. So it's been going like this for some time, and of course it broke through. Now, I was looking for this rally to continue to the top of the channel somewhere up here. And of course that didn't happen again because it really couldn't withstand the market forces going on in the entire asset class. And a lot of that has to do with what's going on globally and in the equities markets. So yeah, Chainlink isn't bucking that whole trend. But so we got to the bottom of this channel, and it was looking for a while there like we were doing well, and then we saw some real weakness, and I pointed that out right before the massive dump. But I do want to show you how Chainlink, if you do look at it on its own, most recently. So it had a little bit of weakness in here and obviously weakness here. But from this point, September 21st, where it came close to the bottom of the channel and then we had a nice bounce upward, that was to the top of that peak was a gain of about 85%. Okay, so we know that right now Chainlink is not one of the strongest ones coming out of this big dump, and we know that Ethereum is one of the strongest ones coming out of this dump. It's almost back near its all-time highs. But let's measure what Ethereum did, one of the strongest ones, from that same September 21st to that same peak. So one of the strongest cryptos in the same time period had an 85% rise, okay? So we had an 80, like maybe a half a percentage point less in Link. So that was showing that Link, I think, was ready to go if the broader markets didn't, have the issues that it had. Chainlink was really looking pretty good. So aside from that, we are where we are right now. So let's put that aside and take a look at the more current data. First of all, I just wanted to point out here real quickly that this is the entire history of Chainlink on Coinbase. And if you look down here, the RSI had never hit such a low, right around 25. It had never been as low as it hit with that current dump. Okay, so is it going to rebound from here and keep going up? Well, I think a lot of that still has to do with the broader markets, right? I mean, there's just no getting away from that. But this long-term trend is now broken. We had three touch points here to start with, and then it bounced off of it before reaching it here. There's that sign of strength, and then broke through. When it got back to that line, I was warning of some weakness, and then obviously it broke through. All right, so let me tell you now that we are on the other side of that trend channel, what I'm seeing here, which is, let me zoom in a little bit. Okay. All right, here we go. So now that we're outside of the channel, we can look at things a little bit differently. And it appears as though a new trend is forming. Now the old trend channel, it almost seems like that was based on the 4-year market cycle, which a lot of people conjectured that we were going to still function in the 4-year cycle away with a rally at the end of this year. And now, of course, more and more people are thinking that it's looking like it's going to be a lengthening cycle. So this is actually right in line with that. The the trajectory has flattened out a little bit. So in the past, though this is where the old trend channel was, it could not maintain this trajectory. That was a little steeper. So if we're going to flatten out a little bit and go for a longer time period, it would kind of make sense that the trajectory would flatten out a little bit. And I think that this is pretty interesting because it's got an awful lot of touch points here. We've got 2 on this side, and then it breaks through here, and then we've got 1, 2, 3, 4. This one doesn't quite touch, but personally I'm going to count that. Everyone might not. I like to look at the big picture more than, I mean, it even depends on which exchange you're looking at. So to me, it doesn't have to be exactly perfect, but for some people it needs to be perfect. I'll leave that up to you. But for me, I'm going to count that. And then of course we have this most recent one. Now we don't know for sure if this is going to hold. We might just be getting a little bit of a bounce and then heading lower. You always have to think in terms of probabilities. That's why I always like to give you both sides of the equation. And it's really not, some people think that there's a problem with giving 2 different possibilities. I kind of think that's a little bit silly. There are no absolutes as far as I'm concerned in markets and trading. If you think in terms of absolutes that there's 100% possibility that X, Y, and Z is going to happen, I would personally never think in those terms. I always think in terms of probability. So currently, I give it a higher probability that this will hold because of this history that we have here, but also still some probability that it can break through. Of course it can. And acknowledging that is not a problem. That is a strength. You need to be aware. Okay, you don't need to, but for me personally, I prefer to be aware of all of the possible scenarios. I assign them a probability. On this channel, I don't give you my exact percentage probabilities. That would be something that I would do in a different forum. On this channel, in these videos, I speak in generalities, and right now I give it a higher probability of this holding and a lower probability of it going through. Either one is possible, but I think it's looking pretty good at this point, again, depending on the wider markets. So at any rate, I wanted to show you this developing pattern here, which, if it holds to this pattern, you can see here that if we give it a little bit of a top here, that's far from a perfect top. But it is pretty interesting how it has actually been trending up for some time with the higher lows. And if this were to continue, you would see it getting kind of boxed in. And then at some point, typically in a situation like this, it would break out. It can break out to the downside as well. But if we're looking at historically, we get a lot of these. It wasn't even quite as steep here in the past before it did the same type of move. So that is what I will be looking for. Another thing that I referenced in the previous video is this 30-day pattern that I have found in the total market chart. All right, and at the time of the last video, it looked like the 30-day cycle was still intact. Now I pointed out how it had expanded. So all of these cycles between all the lows, just in case you didn't see the last video, these gaps between all of these lows here has been right around 30 days for months and months. We got 25, 29, 30, 30, 28, 29, and then here we hit 34 and then 36. Now, at the time of the last video, we were somewhere around here, and it looked like this 30-day low was going to hold, but it looks like, obviously, at this point, we hit a new low. Now, the way that I would look at that is, obviously, it's not as clear of a picture as when the nearly exact 30 days was holding for all of these time periods. But if we expand this one, and yeah, the count ended up being longer, and that would have been an interesting count to look at, because now we have an expansion that's kind of holding steady. So this was plus 2 more days from the 30-day pattern, and this was plus 2 from the previous gap pattern. and this was plus 2 days. So it does appear there's only 3 of these, so it's really hard to determine if for sure this pattern is now expanding, which would mean if the expansion holds steady, again, it's getting hard to use this as a predictive measure since it's changing slightly from gap to gap. But just to have an idea in mind of what's possible, we would be looking for the next low to be around 40 days if the expansion continues in the way that it has been going. So that would be plus 2 for this gap, and that means that this low would be the low. And at this point, it's looking like a pretty good bounce, and that's going to end up being the low. Not for sure, of course, but if this pattern holds up, that means it would go something like this. Okay, now there's a lot of different possibilities of how this can play out, because it doesn't determine how low or how high the next low will be, but only that it will be another low. So any of these possibilities are in play if the pattern continues. Just that what the takeaway from this is that we could possibly not see another low until about mid-January. All right, so that's something to keep our eyes on to help us get a gauge of where we're at. And just the overall big picture is, looking for this pattern to hold up, this line to hold up. So far, all the markets are up from their lows, and it looks good for now. But obviously a lot of volatility, and we got to keep those probabilities in mind that nothing is guaranteed. And I just want to show you this data, make you aware of the data, so that you can decide for yourself how you might factor these different key points into your own trading plan. So that's where we are at for now. Thanks for joining me today. If you found this video useful, please give it a thumbs up. It really helps out the channel. Thanks for joining me, and I'll see you next time. Bye-bye.